Welcome to this episode of What in the Real Estate. This is Amy Mullen Thornton with RE/MAX Professional Associates, and we're here to answer the most common or unique questions that you have in real estate. So if there's anything you think of as we're talking with Lynne Esposito from Cornerstone Bank, feel free to put it in the comments below. I wanted to talk with Lynne today because there are a number of questions that I get from first-time home buyers and second-time home buyers, and they come up again and again and again. And I thought it would be a good way to sort of outline the beginning stages of your either first time or second or maybe even third home purchase. But the first question that I always get, Lynne, is what kind of documents are needed in order to get the mortgage pre-approval? And the reason I wanted to go over this is because I can't overemphasize how important it is to know your numbers before you start looking at properties. And that the mortgage pre-approval process is actually kind of a big process because it's hundreds of thousands of dollars. So what do you need as a lender in order to pre-qualify someone to purchase a home?
That is such a good starting point, Amy, because you're absolutely right. I mean, and the banks or lenders that are going to do the pre-approval for that customer, they want to make sure that when that customer gets that offer, that pre-approval letter, they're going to be able to go right to looking at their homes because they're going to probably go start falling in love with properties. We want to make sure we give them the best direction. So yeah, so right off the bat, think of it as the lender needs to document specifically like three key elements. They're going to want to be able to run their credit report. They're going to want to be able to document the income to figure out that debt to income ratio. And they're going to want to make sure that they have the assets of what they're planning on using as down payment. We don't just specify down payment either. We say settlement costs because a lot of customers will say, well, I have 25 to put down, but they don't realize that it's not just a down payment. We have to also figure out what all the costs involved are. So right from the back, we would want to do an application. Now, many lenders do it probably pretty similar. You know, you can do it online. You can call your lender directly, do it right over the phone. Basically, that part of it's very simple. It's a basic application, but it's going to thoroughly go through all their information. Once we get the application and the approval to proceed with authorization with a credit report, we're going to want to run the credit report. So application, credit report, right off the bat. Then, depending on each situation, because everybody's situation with their income is different. Some people may be only on Social Security or receiving pensions. Some people might be regular wages. So we're going to want at least a pay stub and a W-2. Now, we don't have to go crazy if they're regular wages. We don't have to go crazy with getting like 4 or 5 pay stubs as long as it's consistent. But we definitely want a recent pay stub. When we say recent, within a 30-day period. And we definitely, I mean, sometimes we do like to verify, especially if they've just started within the last year or two, you know, with a W-2. But also, once we get the pay stub, we can move forward and verify their assets as well. Now, the asset side isn't as complicated because we're going to trust that they know how much is in their accounts, how much they feel comfortable. Some people have more than enough and they don't want to use it all. So we're basically okay with verifying, you know, what they basically say to us. But they need to understand if they're going to be getting a gift. We need to understand the transaction. Are they going to be borrowing some of the money, or are they going to be getting it from a family member as a gift? So as long as we understand the asset side. So I would say, the only time it can take a little longer is if they're self-employed, because for income, we are going to need the 2 years tax returns. So basically, regular wages, self-employed might be a little more thorough because we need their tax returns first. And again, all of that can be submitted even electronically these days, you know, securely. So it's pretty quick process after that.
Nice, excellent. And again, as a realtor going out to look at houses, I can't stress how important that is to know your numbers. You know, I see a lot of times where maybe someone's approved to 400,000, 450,000, but when they look at their month-to-month budget with things like daycare or car payments, maybe it makes sense to keep, you know, the purchase price down around 350,000. So thank you. Another question that comes up all the time, literally all the time with first-time home buyers, and I think it's, you know, from the media and stuff, is are there first-time home buyer assistance program? And like, is there some magic discount or money that shows up because you've never owned a home before?
There are, and definitely that is a magic question too for first-time home buyers. It's good for them. What I always suggest is definitely check with their lender, or if they're shopping around, check with a few lenders, because every lender can also have their own in-house special programs as well. So for instance, with Cornerstone, we actually have an affordable first-time home buyer program right now that we're offering, but that is a discount on their closing costs. And also they can get a lender credit up to $750 off of closing costs. So, I mean, that's money in your pocket that will
Sure
help
is.
them out.
Yeah.
And also the key with that one too is the no PMI. So there's going to be so many different programs out there. They need to understand each program and you know what each offers, and especially like PMI, no PMI, lender paid PMI. You're going to hear all those terms. One that I specifically want to mention, we were talking about earlier, is Mass Housing has
Yes.
a down payment assistance program, and that's fantastic. There are going to be criteria, like, you know, certain credit scores apply. You may have to take up to 5% as part of the down payment assistance. So you're basically at what they call a 95% loan to value on your loan. But basically, there's a lot of different criteria with even the Mass Housing programs that you could qualify for. So I think those are probably the two main ones that I would mention.
Nice. And the Mass Housing is nice, because when I'm presenting the offer, as the agent, they come across as a conventional finance buyer.
That's
so you can get 100% financing without showing as a VA or a USDA, which typically are the only ones that you can do. So the PMI, non-PMI, that all sounds super complicated. And if you haven't been through that before as a borrower, you should give Lynn a call. All of her information is down below. I refer to this with my clients as mortgage math. Because there's just so many different pieces and there's so many ways to make things work, because like you said, it is on an individual basis. And then, you know, lastly, you know, again, most common, my sellers. So a lot of times, you know, if we go in like typical scenarios, you buy a starter home, you live in it for a few years, maybe your family expands, maybe the kids are off to college or moved away. Now you're looking at buying a bigger house or downsizing. And you might still have a mortgage on your first home. So a lot of my sellers ask me, is it possible to buy a house before I sell my house? And there's a lot of advantages to that. One, you're only moving once. Two, it feels more secure. Like to us as people, it feels more secure to go right from this house to the next house. And they talk about a thing called bridge financing. So maybe if you could expand on that a little bit more, because I'm not sure everyone understands what bridge financing means.
Yeah. In the good old days, there was bridge financing where the lender could take out a mortgage on both. So basically you know, pay off, it's like a refinance. So you're taking collateral on their existing house, and then they're also taking into consideration the new house, but they're building off the equity of their current house to basically work as one. When I say the good old days, is that would be a portfolio lender, and I'm not even sure if that's conventionally possible anymore to do it all in two mortgages like that. The better way to do it is a couple ways. Is one, as long as they qualify, it's basically two mortgages still. It's still two separate transactions. So as long as they qualify with carrying their current mortgage, if they have a current mortgage, and also the lender would look at, again, that debt to income ratio, make sure they qualify for the two mortgages. So we take into consideration the new house mortgage as well. The key is, where's the down payment coming from? Some people need the sale proceeds from their current house to purchase the new house. Some people don't. So if they qualify not only with carrying the two mortgages, but also having enough funds, maybe they have retirement that they're going to dip into, or they have other assets already stored aside that they can put down the down payment on the new house. That's kind of how the lender is going to look at qualifying them for the two transactions.
That's a good point too. It's not even just so much qualifying credit wise and income wise, but having that money to put on the down payment. I've also seen some clients who will take out a home equity on their current house if they have a very low mortgage or no mortgage, and then this way they're a cash buyer on their purchase, which is makes them very competitive out in this environment.
Absolutely.
This was fantastic. I think this really makes some of these mortgage questions much simpler to understand for people. And like I said, I would totally encourage you to reach out to Lynn. She's been with Cornerstone for 37 years, correct? Yep.
Correct.
And definitely one of the leaders in the industry. Her office is located right down in Worcester on Park Ave, although she's available by phone and email, and the online link to the mortgage application is below. So thank you everyone for checking us out. And again, this is What in the Real Estate with Amy Mullen Thornton from RE/MAX Professional Associates there, and Lynne Esposito from Cornerstone Bank. Thanks so much, Lynne.
Thank you very much.